Hello friends, welcome to Learning Sessions, and today in this video we are going to discuss about the digitization of retail banking products, and it's quite important from the theoretical point of view from the module B of RBWM, that is Retail Banking and Wealth Management. And if you're seeking all the videos of retail banking and wealth management, do subscribe to our channel right now and press the bell notification icon so that you get updated whenever we upload the new videos and the full course, which will be covering the full course videos, chapter wise previous questions, mock test, mega mock test, and the complimentary access to EPDF notes. Each and everything is covered on our website jaib.learningsessions.in. You can also be visiting the link which is available in the description box below. So do join right now and start preparing for the same. And there's a freebie for you for each and every sign up. On simple sign up, you'll be getting access to all the PDFs of all the 4 papers of JAIIB, right? So do sign up right now and start preparing for the same. Let's start the session over here, and it's related to digitization of the retail banking products. Now, what is actually the impact of technology? Because in retail banking, we are dealing with the mass population. There are so many individuals, let's say millions of individuals, to whom we are to cater the services. Now definitely, if we are to use the data analytics, if we are to use the artificial intelligence, we can be analyzing the customer transaction pattern over there, and further what is the spending pattern, and accordingly we can be offering them the customization product over there and personalized product over there. So increased use of data analytics and artificial intelligence can be helping us so as to provide the personalized services to the customers. And also it's related to self-learning banking system, like the HDFC has launched a chatbot that's named Eva. Now when you're basically dealing with Eva, it's not related to that it's only answering the predefined commands, but also it's learning, it's self-learning from the inquiries of the customers, and further appropriately it's replying back, and it also is basically accepting the NLP, that is a natural language. It is also able to process the natural language over there. So that's also the one of the benefit associated with the same. And further also through the RPA. Now RP is actually what? RP is a robotic process automation. Let's say case that there is some processes, there are some procedures which we want to basically repeat again and again. We want to automate those tasks over there. This way we can be increasing the efficiency, and further we can also be reducing the errors. And further it's related to open banking and the embedded finance. Now open banking and embedded finance actually enables the third party developers to build innovative financial products. Now let's say case that we are having a banking API, and further we integrate it with the third party application server provider over there, and further now they can be accessing the data and further can be providing the innovative solutions based upon the same. That's related to the open banking and the embedded finance over there. Embedded finance is when a non-financial company, which is a non-financial company, it offers the financial products and services through the APIs and the platforms over there, that we are going to embed the banking into a non-financial company. That's a embedded banking or embedded finance over there, right? After that it's related to IDRBT. Now IDRBT is Institute for Development and Research in Banking Technology. Kindly please note down this name because it's quite important. Institute for Development and Research in Banking Technology, that is IDRBT. It was established by the Reserve Bank of India in 1996. Okay, so it was established by Reserve Bank of India in 1996, and main focus was related to that we want to basically research and further experiment development of the things specifically related to the banking technology. Basically we wanted to develop the banking technology, and its main focus was on the same only. And Reserve Bank of India actually constituted a committee, and that was basically chairmanship under the WS Saraf committee, that is the Saraf committee was there. And particularly this committee was on technology upgradation, that how we can be upgrading the technology in the payment systems over there, and it was set up in 1994, right? And this committee submitted the report in December 1994, and the committee actually emphasized that we must be having an apex level institute, a top level institute which can be undertaking the development and research specifically related to the information technology in banking technology, financial sector over there, and having a specific focus on banking over there. So based upon the recommendations from this particular committee, Reserve Bank of India established the same, that is the IDRBT was established in 1996 over there, right? Now, there are different technologies which have been developed by the IDRBT. One, it's related to the Infinet, that is a Indian Financial Network. Second one, it is related to the SFMS. Third, it is a NFS, which is used in ATMs. And the fourth one, it's related to Indian Banking Community Cloud, right? That is IBCC. So we will be discussing all these four. Let's have a look at it. First of all, it's related to Infinet. Now, as the name suggests, it's an Indian financial network. Now, that particular network which is closed and particularly there only for the communication between the limited number of users, and it is secured enough, right? That is the Infinet, that is Indian financial network. It is secured, it is private, and it is closed user group, that only the permitted and authorized users can be accessing this particular network. And further, it is established by IDRBT in collaboration with the Reserve Bank of India. Why with the collaboration with Reserve Bank of India? So that Reserve Bank of India can monitor the network over there, and it is actually specifically designed so that whatsoever the communication needs related to the banks and financial institutions over there, that can be catered, right? So Infinet actually serves as a backbone for interbank communication. When banks are to communicate in between, in that scenario, Infinet is there so that the secured data change is there, the integrity is maintained, and further secured transmission of financial messages can be easily done by the participating bank through the Infinet over there. Now let's have a look at the advantages of Infinet. First of all, as I told you, it's a secured communication and it's a reliable communication over there, because there is a reliable infrastructure, there is dedicated infrastructure which is maintaining the Infinet over there. High level of reliability is there, because when you're basically transmitting critical financial information, reliability is must, right? And after that, it's related to real-time transactions can take place in case of Infinet, and basically fast transaction and efficient transactions are there, and it is quite cost effective. Why cost effective? Because previously we were relying on physical communication methods and manual processes over there, so it basically led to cost saving and increased operational efficiency too, right? And efficient interbank communication is there because it's specifically for the interbank communication, and it basically supports the RBI monitoring, because I told you it has been developed by the IDRBT in connection with the Reserve Bank of India. Now it basically enables secure transmission of the messages whensoever the banks who are participating with each other, and further they are sending messages, so RBI can be monitoring the same. That is why it supports the RBI monitoring. That's all about the Infinet. So Infinet is actually a secured, private, closed user group communication network. Okay. And after that, it's related to SFMS. Now SFMS actually came there in 2001 over there. In 2001 over there, it's a standardized protocol. It's a standardized protocol. Let's say A wants to send messages to B. Now in this scenario, there is a standard template. There is a standard template, and there are numerous templates for different type of transactions. And when A is to communicate to B, or B is to communicate to C, or A is to communicate to D, or any parties in between, they will be using those standard templates only, so as to basically send the messages in between them. And further, that will be making it very much standardized, efficient, and further reliable communication system over there, because its messages are encrypted. Its messages are encrypted. That's why it is said to be structured financial messaging system. So structured means that everything which is present in the message over there, that is structured, and because we are sending the financial messages, so it is financial messaging system over there, right? So it is actually designed to enable efficient and reliable communication. And SFMS was launched on December 14, 2001 at IDRBT, and basically allows that we can be sending a lot of number of messages, and for the message formats over there, and for the authorizations can be sent, and which can be used by the financial community over there. And bank can be linking the SFMS through appropriate connectivity. Like the bank can be linking the SFMS through particularly through PSTN. That is basically if we are using the public switch telephone network, or we are using simply the telephone wires over there, or even we are using the ISDN or particularly leased lines over there, we can be using the structured financial messaging system. So we can be integrating SFMS particular platforms to the PSTN, to the ISDN, etc., right? So using the existing infrastructure, this particular messaging system could be used, right? And further, what were the features of SFMS? Standardization, as I told you, because we are to basically select a number of templates, and a particular template is to be selected, and the message will be sent as along. So there is a standardization. Okay, so all the participants which are there, they are going going to use the same message elements or the codes while transmitting the messages or information. And for the types of messages, now SFMS actually supports a wide range of financial messages, like we can be sending payment instructions, securities trade confirmation, fund transfer, and even anonymous format message can also be sent. And also there is interoperability, right? There is interoperability. So various financial systems and institutions are there, and those all are interoperable by using the SFMS over there. They are now sending the financial messages seamlessly and efficiently, right? And this message system is quite secured, and further it maintains the confidentiality and integrity of the data which is being sent, and for the flexible architecture for centralized or distributed deployment over there. Now SFMS is actually flexible infrastructure. It is having the flexible infrastructure. It basically enables both centralized and distributed deployment options. Not centralized means where the central body will be maintaining the system and only the messages will be routed through the same, right? And distributed means that anyone can be sending messages directly to each other. That's particularly, it supports both, right? And further it's related to batch message exchange. It's not related to that only single message can be exchanged. The messages can be grouped together, and further the batches can be sent, and also the files as batches, or particularly message can be transmitted in batches so that the overheads are reduced, right? And further smart card based user access. Now the system actually employs smart card based user access over there, so there is extra layer of security which is available, which basically ensures that only the authorized person can be accessing and further processing the financial messages. Okay, so these are the advantages of NFS, particularly SFMS. And then it's related to NFS, that is a national financial switch. Now if you know the working related to the ATM, so if one ATM is to be connected to the other ATM of the same bank, then interbank particularly infrastructure is required. And further also, if one bank is A and the other bank is B, and if these are to operate together, there is a switch that is required through which they will be connected. Now NFS is that particular switch which is connecting all the ATMs in India, right? So it is centralized payment processing system which is developed by the IDRBT for the Indian banking industry, right? So it's a centralized payment processing system. Kindly please note it down. It's a centralized payment processing system over there, and it is interoperable network. It's not like that only one bank is or only one financial institution is using the same. It is interoperable network, and further it can be used for seamless and secure electronic fund transfers and ATM transactions over there across the different banks in India. So NFS is said to be the backbone of ATM operations. So all the ATM operations are dependent upon the same, and electronic payments services are dependent upon the same. Now let's have a look at the features of the same. Now first of all, it's related to NFS ATM network was launched by whom? It was launched by IDRBT in 2004. It was launched by IDRBT in 2004, but later on in 2009, NPCI, that is National Payment Corporation of India, took over the ownership. So they took over the ownership and the operations of the NFS ATM network from IDRBT to itself, and further it's related to membership of subscription fees over there. Now the banks or financial institutions who are wishing to join the NFS network as members, they are to pay one-time joining fee that's amounting rupees 3 lakh rupees plus the applicable taxes they are to pay. And further in the sponsorship model says that if it's a member model which is particularly connected to NFS over there, and further the bank B through A want to connect to NFS over there, in that scenario they are to pay a sponsorship fees of rupees 6 lakh plus applicable taxes to NFS. And other than that, it's related to interchange fee for ATM transaction. Now what is interchange fee? Let's say case that customer of bank A wants to withdraw through ATM of bank B over there, right? In that scenario, the card issuing member pays an interchange fee. Yani ki bank A over here will be paying an interchange fee to the bank B for each and every ATM transaction which is approved, and further the payment will be paid as in the form of the interchange fees to that particular bank whose ATM was used. Okay, and current interchange fee for the cash withdrawal and for card to card transfer, it is rupees 17. If a basically person is pursuing for cash withdrawal or for card to card fund transfer, it is rupees 17 per transaction, and for the other for non-financial transactions it is rupees 6. Okay, so that is actually the interchange fees that is to be paid. So who will be paying the interchange fee? The card issuing member will be paying the interchange fee to that particular bank whose ATM has been used for approved transaction, right? Further, it's related to transaction switching fee. Now switching means what? Now the switching is taking place at NFS, and NFS is undertaken by NPCI. So whatsoever the switching fees that will be paid to NPCI, for per approved transaction, a switching fee of 0.45 rupee along with applicable taxes will be paid to NPCI over there. NPCI will be handling the switching of the transactions between the issuing bank and further the acquiring banks over there, and ensuring the smooth and secure communication. Now let's have a look at the services which are being offered by the NFS. There is interoperable cash deposit can be done through the ATM and the participating bank, and for the mobile banking registration can be done, card to card fund transfer can be done, we can be requesting for a statement, and for the Aadhaar number seeding can be done. So these services can be done interoperably through the NFS, right? Now let's have a look at the IBCC, that is the Indian Banking Community Cloud. Okay, now what do you mean by cloud computing? Now cloud computing is something, let's say the case that you are having a Pentium 4 processor, which is a very slow processor, but you want to access a very high speed processor. In that scenario, you will be connected to a cloud, and further you will be deploying your structure over there, and let's say you purchased a particular panel over there which is, let's say, i9 processor, and latest generation processor is there. Now you can be accessing all those resources through the internet. So whatsoever you want to process, you can be processing on that particular system over there which is not yours, right? So this is a technology model which basically allows the user to access and use computing resources over the internet, and whatsoever you will be using, you'll be paying for the same. You need not to basically own the system, you need not to basically maintain the physical server or the infrastructure over there. You can be leveraging the resources as such whatsoever you need and whatsoever you require, as per that you will be using the same, right? Now community cloud is something related to that we are not basically allowing each and everyone, but we will be allowing only a certain amount of or certain number of organizations that they will be able to use the resources of the same. So multiple organizations or entities which are having the common interest or common requirements or compliance considerations, they will be using the same infrastructure. So it is basically designed so a particular specific community needs can be catered and can be managed. Okay, that's actually further related to it. Let's say the case that there is a third party service provider, so they are managing the infrastructure and multiple similar organizations are using that particular infrastructure. That's related to community cloud, right? Now further, let's have a look at the cloud services model. Now if we look at the cloud services model, software as a service can be provided. Let's say case that we are using the control panel, which we say to be CP, right, which is basically used for hosting of the services over there. Now this control panel is actually installed on one server, and further it is being used by multiple users over there. That's a software as a service being used, right? So you'll be accessing on demand software and you'll be paying as per usage over there, and also you can be using platform as a service, like particularly let's say I installed Ubuntu or Windows somewhere and that particular environment was created by me and I was using it over there. So I need not to basically install that particular environment at my place, but over the internet I will be able to access that particular structure over there, right? Further it's related to infrastructure as a service. As I just told you, let's say case the example of AWS. Now our website is actually hosted on AWS. So basically we are not owning any kind of PC where the website is hosted. We are just using the service, so we are just using the servers and we are just using the infrastructure over there as a service over there. That's the infrastructure as a service, right? After that, it's related to customer analytics. Now, what do you mean by customer analytics? Now, there are huge number of customers in retail banking and millions and billions of transactions are being done by them. Okay, so basically we want to get out the pattern. We want to get to know the pattern, their spending pattern and all the things over there. What is their spending limit? What is their income pattern? Or what are their structures? We basically want to get the insights about the customer behavior, their preferences, their needs and their characteristics over there, right? And that is said to be what? That is said to be the customer analytics. Now, customer analytics basically play a very important role, because if we are having the deep insights about the customers, we can be cross-selling better and we can get to know better. We can be providing them personalized services, we can get them customized products, and ultimately we can be targeting them well, and further we can be leveraging our outputs over there. That's the main funda related to it. Okay, now after that, it's related to institutionalization of customer relationship. Now if we use the customer analytics so as to help institutionalization customer relationships, so that we can understand customers well, their needs can be well understood, or we can understand their preferences or expectation, definitely it will lead and further we can be providing tailored product to them, right? And further it's related to the customer attrition scores over there. Now, let's say the case that you are known that customer A, B, C are about to leave, right? They're about to leave because their particular, let's say, financial structure or their financial pattern indicates that they are not more interested in our banking services, right? Now, I'm known that they can leave. Now, in that scenario, we can be catering them well, and we can be providing them some customized products so as to retain them, right? So it will be helping us, because if we are having that information, if they are about to leave, so banks can take protective measures so as to retain the valuable customers and prevent attrition, right? And further, it's related to profitability scores. Now, if I know that this particular person A, B, C are there, and B is most profitable customer to me, now in that scenario, I can be providing something extra to that particular customer so as to retain that particular customer for long term, and also so as to build a good relationship with the customer over there, right? So these insights actually help so prioritize high value customers, and we can providing them with the tailored offerings over there so that revenue generation can be maximized, right? And for the customer segmentation, like I told you, we can be segmenting the customers like this is a very good customer, this is a premium customer, based upon their spending pattern, based upon their demographics, based upon their product usage. We can do the segmentation of the customers over there, right? So that's about the customer analytics. Further, it's related to the wealth management solutions. Now, what do you mean by wealth management? Let's say case that there is a customer, and further they come to you that they want to do the tax planning or something, and whether they want to invest their money over something. Now, you'll be basically giving them the references, you'll be basically giving them some support at some level that you can be investing in these services over there or something like that. That would be related to what? That is actually related to wealth management solutions over there. So wealth management solution refers to what? That we are giving them the financial services or the strategies which are basically designed certainly and for the individual, so that we can be helping the individuals and the families that how they can be managing their wealth and how they can be growing their wealth, right? So that they can be achieving their financial goals. Okay, so let's say person A visited us, and I'll be basically, let's say he's having 10 lakh rupees and he wants to invest, right? Now I'll be telling him the strategies that this way you can be investing in, these are the different ways, these are the risk associated, and take the appropriate plan over there, and you'll be getting this particular amount at the maturity level or something. So that's actually related to what? That's related to wealth management solutions over there, right? And further after that, it's related to digital lending. Now what do you mean by digital lending? Like let's say Paytm app is there. Now Paytm along with the Aditya Birla Group company, they were allowing the loans. They were actually allowing the loans to the players over there. Now in that scenario, what will happen? Now in that scenario, they were actually allowing the loans based upon the digital infrastructure only. Now there is no physical branch, and further there is no customer let's say interaction with the bank employees over there. But what they will be doing, that we need to upload our documents, we are to be KYC compliant, and further they will be generating the credit score online itself, and further based upon all the data and for the inquiries online only, they will be lending us amount, and that lending will be done in the shortest amount of time, like let's say within 20 minutes or 35 minutes, right? They will be lending the amount to us. That is said to be what? That is said to be the digital lending. That is said to be the digital lending. So it is a system where the entire process of credit, including the sourcing, including the credit, risk management, disbursement, each and everything is done on the digital platform and in a seamless manner in the shortest amount of time over there. And as per the regulatory guidelines, RBI has formed a new regulatory framework on 10th of August 2012 titled Recommendations of the Working Group on Digital Lending Implementation. Now it is actually based upon the principle. It is actually based upon the principle that the lending business can be carried out only by the entities which are either regulated by the Reserve Bank of India, or the entities have been permitted by the under the law so as to do such business. Only they can be doing the digital lending, and no other person can be doing the digital lending. Now let's understand the highlights of the regulatory framework. First of all, it's related to customer protection and the conduct issues over there. Now let me just tell you that whatsoever the loan disbursals and repayments are required, those will be executed between the bank account holders and the regulated entity only. What does it indicate? It indicate, let's say case A, it was a digital lending platform provider. Okay, and for the let's say case Paytm is a digital lending handle provider over here, but the bank is not, the Paytm is actually not allowed so as to do the lending. So A is actually in association with some other concern. Let's say it's an NBFC. It's an NBFC which is a regulated entity. which is a regulated entity over there, and for the it can give advance. Now when person A is advanced on using the Paytm platform, all the transactions related to repayment and disbursement, those will be done directly between these two entities and not between the third party entity over there, right? That's the main funda related to it. So any fees, any charges which are payable to this Paytm, that is particularly said to be logistic service provider. Now basically Paytm is only providing the logistics, only providing the platform over here, right? So any of the fees, any of the things which are to be particularly to be paid to the Paytm over here, those are to be paid by the regulated entity itself and will not be paid directly in any manner by the borrower, right? And for the KFS, that is standardized key fact statement, must be provided to the customer, where a very neat and clean data will be given, that what interest rate will be charged, what will be the fees, and everything that will be given to the borrower before the executing of the loan contract over there, right? And also it is prohibited that you cannot be automatically increasing the credit limit without the explicit or expressed consent from the borrower over there. That is also prohibited. And further, cooling off and lookup period, if we talk about, now during which the borrowers can exit the digital loans by paying the principal. Now if the particular borrower is paying the principal amount and a proportionate APR without the penalty, the person can be leaving the digital lending platform. It's not the case that the penalty will be levied. Like let's say case I took an advance of rupees 50,000 from Paytm, and when I was about to leave that particular loan over there, exit that particular loan, they said we will be charging you a penalty because your contract was for 3 years over there. No, that's not the case. So there will be a cooling off or lookup period over there, during which I can be paying the amount, principal amount, and I can be paying the APR, that is annualized जो particular rate आपका, and you will be paying the same proportionately, and further you can be exiting the loan over there, right? So regulated entities and the logistic service providers shall be having a suitable nodal grievance redressal mechanism. So nodal grievance redressal mechanism must be there, so that if a borrower is having some issues, okay, or maybe having a digital lending complaint over there, okay, in that scenario that can be dealt with. So if any complaint which is lodged by the borrower is not resolved by the regulated entity within the stipulated time period, that is of 30 days over there, in that scenario that particular borrower can be lodging the complaint under the Reserve Bank of India integrated ombudsman scheme, right? After that, it's related to the technology and data requirements for the DLAs, that is the digital lending apps. What is the technology and data requirements? Let's have a look at it. So the DLAs must be collecting the minimum amount of data which is actually necessary so as to evaluate the credit worthiness. It's not the case that they'll be taking hefty data. They'll be just requiring the minimum amount of data which is actually required by them so as to evaluate the credit worthiness of the borrower over there, so as to assess the risk associated with the borrower over there. That is a minimum data they can be using, right? And further, DLAs should be maintaining a clear record of data they have collected, that what data they have collected they must be showcasing the user, and when it was collected, where it was used, for what purpose it was used, they must be showcasing the borrower over there. And before even collecting the data from the borrowers, the DLAs, that is the direct lending apps, must be obtaining a explicit consent from the borrower over there. That's necessary. And DLAs should provide borrowers with the option to accept or deny consent for use of the specific data. Okay, so DLAs should provide borrowers with the option to accept or deny, that they can be denying that particular we are not giving the consent over there. It shouldn't be the case that it's basically required only, so that only then you can be proceeding, otherwise not, right? So whatsoever the data is being taken by the DLAs, they must be taking a explicit consent from the borrowers over there, and borrowers must be having an option. They must be having a right that they can be revoke the consent. Let's say previously they gave the consent related to the same, and now they want to revoke that particular consent. That particular option must be available, and also the DLAs must be providing the borrowers with an option so that the borrowers may even be deleting the data from the app record if they want to, right? It's not the case that the borrower data will be remaining on the app over there. Borrower must be having an option. If they want to remove the data from the app, they must be getting the option related to the same. Okay, so that's actually related to the steps which must be taken and what are the requirements by the DLAs over there. And if we look at the regulatory framework, whatsoever the loans which are provided through the DLAs, whatsoever the loans which are provided through the DLS, those are to be particularly reported to the CICs. Let's say there is a digital lending application platform, and further they are providing a loan through a regulated entity, and that's whatsoever the loan will be disbursed, those are to be reported to the CIC, that is a credit information company over there. Regardless the loan type or the loan duration, the loan is to be reported. And when financial institution introduce any new digital lending product over there, especially which are offered over the merchant platform involving short-term credit or deferred payments over there, these must be reported to CIC. In short, we can say whatsoever loans which are particularly granted or disbursed through the DLS, those must be reported to the CICs over there, right? So that would be all related to this particular video. I hope that you must have learned the video and must have learned the content over there. So kindly do rate this video out of 10, and further don't forget to like this video and further share this video among your friends and colleagues. The full course is available on our website jaib.learningsessions.in. So do sign up right now and further start preparing for the same. Just on sign up, you will be getting the access to all the PDFs over there. So that would be all. Thank you so much, and further see you again in the next video.